Hello and good morning. Welcome to Traders Next Door. I'm your host, Ed Katashabe from Forex Insights SA, and this is the Daily Scoop. Let's talk about what happened yesterday during CPI. CPI was highly anticipated as coming up as a big report, but it looks like it may have been a bit of a dud. Inflation has risen by 2.4% year on year in the United States of A, slightly down from the expected, slightly up rather, from the expected 2.3%. Month on month saw a 0.2% increase, and core CPI, which excludes food and energy, saw it ticking up to 0.3%. Now, this is a slightly higher than expected result, but still projects the overall landscape of cooling that the Fed wants towards their path of 2% inflation. Shelter prices are largely to thank for the hotter than expected increase because they climbed up by 4.9% over the last year. We had medical care, motor vehicle insurance, airline prices all jumping up, and we even had egg prices that rose over 40% over the last year in the US. So it looks like the whole world is struggling with that egg shortage. So overall, this paints a picture of lingering inflationary pressure. So what does all of that mean for us as traders? Well, the recent blowout jobs report that added 254,000 jobs with NFP combined with this CPI print means that the markets are a little unsure of what's going to happen in the next Fed meeting. The markets were expecting a rate cut at the next Fed meeting, something in the 25 basis points range, but the slightly hotter than expected inflation could cause them to hold off on their plans to actually execute on that rate cut. Some experts predict that if inflation doesn't cool faster than we're seeing right now, the Fed could be a lot less aggressive with their monetary easing. There's right now a 20% chance that the Fed is not going to have any rate cuts at their next meeting versus a 0% chance that we had only a few days ago. So this CPI report is going to make a tangible difference going forward. And these decisions could also see some volatile action in the US dollar. We're at a pivotal point where if we don't see a very clear path forward, there's going to be a lot of bullish and bearish action chopping back and forth in the markets. So in summary, the September CPI report combined with the strong labor market means that it's going to be turbulent in the market moving forward. So us as traders, we need to be cautious but opportunistic. Some big moves are likely to happen coming up in the near future, and if you happen to be on the right side of those, some opportunity to make profits is going to be available. The US dollar pairs are my pairs to watch right now. Any of those are going to see a little bit of turbulence until we know what the Fed's actual decision is going to be come the next FOMC meeting. So with that around the corner, there's a lot of anticipation whether they're going to cut rates or they're going to hold off, and that decision is going to play a medium to long-term impact on the markets. So if you want to take advantage of that, go ahead and get yourself a Vault Funder challenge. Right now, we have the Ultimate Trader that is coming up in the next 3 weeks. So if you want to take advantage of the volatility that's going to happen, make some big profits and win some awesome prizes, go ahead and check the description down below, enter the Ultimate Trader, and you could take advantage of what's about to happen. This has been the Daily Scoop. I've been Ed Katashabe, and we will see you in the next one.